Good morning and welcome to The Street on BNN Bloomberg. I'm Roger Peterson. Thank you very much for joining us. Coming up on the show today, Alan Small, Senior Investment Advisor at the Alan Small Financial Group with IA Private Wealth, is our guest co-host. Then, coming up in 30 minutes, Stats Canada releasing labor data for November. We'll break those numbers down with Brendan Bernard, Senior Economist at Indeed. And of course, we want to hear from you this morning on First Call. You can reach us at 1-855-326-6266. Alan will answer as many of your questions as we can. And of course, if you want to email us, first call at bellmedia.ca. The phone line's open in about 30 minutes. Now, here's some of the stories we're tracking for you in the BNN Bloomberg newsroom. Laurentian Bank of Canada reported revenue for its latest quarter that came in below Bay Street expectations. Profits also fell 16% due to lower income and softer revenue in other segments. The bank also set aside more money than expected for potentially bad loans. The results follow an announcement from Laurentian earlier this week that National Bank will acquire its retail and small businesses, while Fairstone Bank will acquire Laurentian for $1.9 billion. Stellantis has received a default notice from the federal government for moving production of its Jeep Compass SUV to the U.S. Industry Minister Melanie Joly says the automaker is in default on its taxpayer-backed financial aid. Governments in Canada have pledged more than $500 million to Stellantis for costs in its two assembly plants in the country. Joly has been in a dispute resolution process with Stellantis to bring production back to the Brampton, Ontario plant. West Fraser Timber says it will indefinitely curtail its oriented strand board mill in High Level, Alberta, effective in the spring of next year. The forestry company says the move is due to a significant weakening of demand. Nearly 200 employees are affected. West Fraser also says the idling of one production line at its Georgia facility will continue indefinitely. And now our top line story. Netflix will acquire Warner Brothers, including its film and television studios, HBO Max and HBO, in a cash and stock transaction. The total equity value of the deal is $72 billion, while the enterprise value of the deal is about, $82.7 billion. Earlier this morning, Bloomberg's Emmanuel Bagori broke down the situation.
It's going to send shockwaves in the industry. It's a transformative deal for the entertainment industry, not only in the U.S. but globally, given how powerful these franchises are. It would be definitely the biggest ever deal by Netflix. They've never done a deal of this magnitude. And it will also, be very, very consequential for competitors, take Paramount, Walt Disney, and others that are also growing in this field. So surprising also, Tom, to see a potential $5 billion breakup fee. That is quite remarkable, and perhaps one of the reasons why Netflix seems to be, according to our sources, pulling ahead of the game here.
Yeah, that's a chunky breakup fee, as you say, $5 billion US. Manuel, you are the deals expert, so what are you and the team watching for in terms of how this story evolves? This all could happen quite quickly, is my understanding.
Yes, Tom, it's moving really fast. We understand that potential agreement could be just as close as just a few days. We may see something announcing over the coming days. But as with any auction, we need to keep our ears close to the ground because things can move quickly in different directions. I mean, the fact that they have potentially signed exclusivity, that should grant Netflix with enough legroom to potentially get the terms signed, but you never know. Companies can move aggressively if they feel that they are losing out to a competitor. So I think the next few days are critical, although everything seems to suggest that it's Netflix really the one to win on this auction. But let's keep our ears pretty close because things can unfold in every direction.
All right. And this conversation with Emmanuel was having about it happened before the deal was announced. They said it could happen quickly, and it did. Just after 7 o'clock was when it unfolded. Let's bring our guest co-host in, Alan Small, Senior Investment Advisor at the Alan Small Financial Group with IA Private Wealth. Alan, thanks as always for joining us.
Thanks for having me.
What do you think? Who's winning on this? Anybody losing? Everybody winning? Hard to say.
Well, I think Netflix is the big winner, in my opinion. Obviously, you're combining now the biggest streaming company in the world out there with such a great library of movies and TV shows, Harry Potter and Friends, and obviously there's a spin-off there of some of their CNN and TBS and TNT and things like that. But overall, I think Netflix is the big winner. Obviously, they were the more aggressive one to make the acquisition. Where does that leave Paramount? Where does that leave?
Upset by the sounds of it.
Yeah, and will this deal go through from a regulatory, like in terms of a competitive standpoint? We're hearing some politicians talking about the deal. I think it will go through when you look at the competition that a name like YouTube brings to or against Netflix. I think they can make a pretty good argument to say that they can do this, and there's still a lot of competition out there. So to me, I think it's been a Netflix world for a while, and now that world just got a lot bigger.
And the price for it, what is it? 72 billion plus 80,
just over 80 billion.
80 billion into 83 billion in total. Is that in the ballpark? Does that seem like?
I think it's aggressive. I think it's pricey. I think it's not cheap for sure. But I think that kind of takes out everybody else. I would be very surprised to see anybody else come up with a bigger number like a Paramount, Comcast or anything like that. So I think that big number pretty much, to me, is the reason why that deal got done and as quick as it did.
And they're going to be 59 billion in. They're going to carry debt 59 billion. That's manageable.
I think so. And you look at a name like Netflix from a share purchase type of situation. If you're, an investor today, Netflix has been expensive for a while, but yet that has not stopped the stock from moving significantly higher over the years. It's had a bit of a rough patch recently. I think a lot of people have been looking at YouTube as the number one competitor to a name like Netflix. YouTube now moving into live sports and many other things. So I think overall, Netflix wanted to do a deal. I don't know if they needed to do one, but you could see from the share price falling gradually over the last little while that adding something to their business was a great idea, and these assets are phenomenal.
So, and with YouTube, what does this put pressure on them to try and find something, or are they pretty good on their own, do you think?
Well, that'll be a question for Alphabet or Google. I think they're okay on their own. Growing their subscriber growth has just gone exponentially higher. So to me, I don't think you're going to see someone like an Alphabet come in and bid for these assets. But the Paramounts, the Comcasts, I think they're left behind significantly. And you got to wonder, how is this going to affect these companies? I think obviously negatively. What are they going to be saying in their boardrooms now if these assets eventually end up with Netflix, which it looks like it will.
And of course, you'd mentioned briefly the regulatory. I mean, something like this, deals like this, have we seen them go through before? Concerns about monopolies, oligopolies. Do you think this one will get through?
I think this one will get through. I think that, as I said, I think there is competition in the space. There's still a lot of competition in the space. Netflix is now obviously a lot bigger than they were just 24 hours ago, but I think this will go through.
Okay, well, we'll see what happens with it. Still lots ahead with it, but for now, we're going to head into a break. Alan Small, Senior Investment Advisor at the Alan Small Financial Group with IA Private Wealth, is our guest co-host today. And coming up, take a look at the markets before the bell. All right, let's see how things are shaping up on the markets. We'll start with the U.S. futures. And right now they're bouncing up a little bit. Of course, waiting for that report from the Bureau of Economic Analysis on consumer spending in September. In Asia, the markets, let's see what they were doing. Yeah, Nikkei taking a hit. Odds are increasing of a Bank of Japan rate hike. That's putting pressure on rate-sensitive stocks there. You can see Hang Seng and CSI 300 in the green, while the Nikkei was down by more than 1%. Over to Europe now. Everybody in the green, not by much for the FTSE 100, but the CAC 40 up by a quarter, and the German DAX up by 0.7%. And the TSX finished another record close, led by banks, technology, and energy stocks. You can see it was up more than a percentage point, continues to perform well. And who were some of the biggest winners and losers yesterday? No surprise, there's EQB, the bank, announcing that deal with PC Financial, taking control of that from Loblaw. It was up 12.8, and Descartes was up 14.3. Going the other way, First Majestic Silver off by 4.25. Ivanhoe Mines down by 3.4. And looking at the metals, they continue to trade in record, near record territory. All of them are up. Oil, it is pushing towards that $60 a barrel price tag again after dropping below it for the last few weeks, but it's getting there again. And it's been a busy week. All the major Canadian banks reporting their earnings. And to sum it all up, we're back with Alan Small, Senior Investment Advisor at the Alan Small Financial Group with IA Private Wealth. All right, report card for the week. How'd they do?
Fantastic. And I think coming in, I had said to many that I was expecting a pretty good report card. You know, some banks set aside a little bit more money for some potential bad loans. But overall, the capital markets, the wealth management division, business outside of Canada, extremely well. And that was more than enough to offset any extra money that maybe some of the banks had set aside for potential bad debt. So to me, the banks strong. I think picking up from where the banks to the south left off, the U.S. banks, some of the big banks down there, Citi, Bank of America, JP Morgan also reported fantastic earnings. So you kind of had to figure that our banks would follow suit, and they did. The question I have now is, what do you do with the banks, right?
Well, that's what I was going to say. Are they priced to perfection?
I think so, or pretty close. You know, you're looking at these banks now. You know, you have, for example, Royal Bank trading at 16 times. You have TD Bank 14.5 times. Scotia even, which used to be the cheapest one, 12 times earnings, forward earnings. So to me, how much further can these banks run? Banks has been a great place for Canadian investors to invest over the long term. You know, you pick up a pretty good dividend and you have growth over time. But now that dividend has shrunk a lot. Some of the banks, most of the banks actually increased their dividend this go round. So now Royal is just paying about a 3% dividend. You know, TD Bank just over 3%. The largest dividend now is still Scotia of the main five, just under 5%. I guess about a year ago, that would have been over 6%. So the banks have had a great run. It's been a great place to invest over the last, let's call it 12, 24 months. But I think it's becoming more difficult. I think they're becoming more expensive. And I was actually hoping to see a bit of a sell the news phenomenon, but we actually got some more buying over the last little while. And a lot of those banks now are trading at all-time highs or at least 52-week highs today. So tough to buy new today. I think if you own them, you're probably going to hold on to them. But to get more, put more money to work there, it is difficult.
So what's it going to take then for the banks to be attractive again?
Yeah, well, I'd like to see...
Not that they're unattractive, but...
I'd like to see a bit of a pullback at some point, you know, buy the dip if we get one. But we're going to have to see, right? I think interest rates, if they continue to fall in the U.S., it looks like they'll cut rates again coming up on the 10th. Will we cut rates here in our country? I think there's that happy middle, right? Happy medium. You know, you cut a little bit to make loans a little bit more affordable, but you don't want to cut too much. And if they do cut too much, then the banks can't charge enough for the loans they provide. So you want to have, you know, not too hot, not too cold, just right kind of situation, which I think we're in. And we're going towards maybe with a couple more cuts. I think the banks will be just right. So we'll have to see what they report. If they can continue to increase their earnings, I know a lot of them are trying to increase business outside of Canada, like a CIBC.
Yep.
I think that has definitely helped them. If we see profits and earnings go higher, obviously the bank, the shares become cheaper. So buy on the dip or perhaps look for some more strength down the road.
Okay, and the two sales this week, what'd you think of them? Laurentian on Monday and PC Financial.
I think Laurentian was inevitable. They've been up for sale for quite some time. They finally got a deal done. We saw the earnings that came out just today.
Yep.
Laurentian, soft. Of course, they've been looking to be sold for quite some time. EQB, formerly Equitable Group, a name that I own for many investors, down from where it used to trade, well over $100 a share, got into the high 80s. Yesterday, nice to see up 13%.
Yep.
anytime that I guess now the 7th largest bank in our country can gain some more assets, some more customers, it's a win for them. And I think that's why they did that deal.
And do you see any more? Are there any more deals of that scope, or is it mostly just kind of hunt and peck now?
Yeah, I think it's been hunt and peck. Pick some, for a while now. Tough to compete in this country with the big 5 or big 6 if you count National Bank. They pretty much dominate. Unlike in the U.S. where they have a few thousand banks, we have not nowhere near what I think we're at 30 or 40 ourselves, but really 5 dominate in all markets. So tough to see someone like an EQB rise, but they've done a great job. CEO's done a great job, in my opinion. And it's a name, if you're looking for that online bank, I guess they would be the one that is the most online and growing, hopefully quickly to compete against some of the larger, the top 5.
All right, we're almost out of time for this, but just overall on the market, thoughts on how the week looked, how it's shaping up?
Well, I think right now,
we head into the final month.
Yeah, I think investors are going to find it difficult a little bit. There's not really much of a catalyst going into the last 3 weeks of the year. I think seasonality will probably be your best friend. Normally, December is a good time for investors. We get that hopeful Santa Claus rally, and hopefully we see a cut by the Fed on the 10th, and we're going to get, I guess, some jobs numbers today out of Canada, but we're also going to get some inflation data. Even though it's old in September, PCE is coming out today in the U.S. We'll see what that says. But overall, I think a lack of catalysts, perhaps investors may just be on the sidelines. So I'm looking for a bit of a flat market over the last 3 weeks.
All right. Maybe that's not a bad thing. Everybody take a little breather.
That's it.
Okay, up next, we'll be back with Alan to see what undervalued investments are on his radar. Time to see what's on the radar for Alan Small, the Senior Investment Advisor at the Alan Small Financial Group with IA Private Wealth. And we're coming to the end of the year, and you're looking at some undervalued investments. It sounds funny to say Meta as undervalued, but...
Yeah, interesting. So we had that dip, right, in November prior to U.S. Thanksgiving, 5-6% decline in the markets, kind of spooked some investors. But since then, we've seen the markets rebound quite strongly. So interesting name like Meta. When they reported earnings, fantastic earnings. They had a bit of a tax hit, one-time type deal. But what they said was they're going to spend even more money on AI, and that, I guess investors didn't like that, and they sold the stock significantly. At one point, the stock sold off 25%. I guess a lot of people were remembering what Meta did, I guess, a few years back with the metaverse and how much money they said they were going to spend there. The market didn't like it.
Pulling away from it.
And so now recently they said, well, we're going to spend a lot of money, but we're also going to cut over here. And now the market seems to like that, and Meta has rebounded nicely, but I think there's a lot more to go. So even though the market has rebounded and made back most of the losses we saw in November, there are a lot of big cap tech names like a Meta, like a Dell, or even an Oracle that are still down in and around 20%. Oracle's down over 30% from the highs. And I think these names, even in the tech space where we think of tech as being overvalued, there are a number of big cap tech names that are undervalued. And actually, when you look at the Mag 7, so the biggest 7 tech names out there, their PEs are actually less today, like an NVIDIA, another one, than they were a year ago. So that just tells you how much they're earning. And their stock prices obviously are not matching the rise that we're seeing in their earnings. So when you look at a PE multiple or a PEG ratio, whatever you'll use as an investor to look at these stocks, it's actually cheaper today, a lot of these Mag 7 names, like Alphabet, or although Alphabet has moved up significantly, but Meta, Amazon, Microsoft, Oracle's not a Mag 7, but that's a lot cheaper. So a lot of opportunity, I think, in the tech space. A lot of these names, Dell, trading, I think Dell's like 13, 14 times only. So very cheap and a lot of promise and great earnings. So,
not concerned about that spending? All the spend, like not seeing a return yet on it?
Well, I think that is a little overblown. You hear about the spending. Are they over their skis? Oracle comes up with that with respect to that. I believe that these companies, they were obviously very profitable before AI came around. Whether you're Microsoft, whether you were Oracle, these are companies that have been around and very large businesses, and they've been doing their thing, whether it's infrastructure, software, whatever. So no, I'm not concerned. I don't think we are in a bubble as people fear right now. I think that is overblown. I think you will see at some point a dip in these names. We just did see one. But that's healthy, and I think on the way to bigger and better. So a name like NVIDIA, the biggest chip company, the biggest name in the world today, trading at a forward multiple of under 30 times now. Cheapest we've seen it in a long time. Do you look at a name like that? So to me, I think these names are making even more sense today, if you can believe it, than they did even a year ago.
All right, let's go a little different direction here. United Rental.
United Rental, love the name. Obviously, infrastructure. They rent out heavy machinery, like a Caterpillar, except they rent it out primarily North America. So I think if you want to go more North American versus Caterpillar, which is more global, you end up with a name like URI. And URI's down about 20%. Yeah, you can see it there on the chart. Down about 20% from the high. Again, another great company on sale.
Okay, we've got a few to go through here. I just want to get to a couple more, and if we can, Blackstone.
Blackstone, great name. One of the largest, if not the largest, asset manager in the world today. They own a lot of real estate, different types of real estate, whether it's buildings or you name it, they're involved in it. They're actually benefiting a lot now from the data center build out because you need space, right, to build these data centers. And where are they getting the space from? Companies like Blackstone. And as you can see there on the chart, another name down from the highs of just over $200 a share today, around $150. You're buying a fantastic asset manager on sale for quite a bit, over 20% on sale. So a great name to own, I think, in that space.
All right, I think you almost have the entire NYSE right now. Vistra, let's do Vistra.
Vistra, power generation. Obviously, what do we need when you talk data center and in AI? You need power. Yeah. And there's not enough power out there, nearly enough, as we keep hearing a name like Vistra. Again, another name that has come down, not as much as some of the others, but it has come down. And I think a name trading at, I guess, more acceptable, I guess maybe that's the word, multiples than some of their competitors like a GE Vernova, which is another power generation name. Vistra is trading at least a name that, you can say it's not cheap, but it's definitely not as expensive as competitors. So I think a name that you could take a look at to generate the power that will be necessary going forward for all these data centers.
Okay, you got about 30 seconds. Ones you're not on the radar, but you're avoiding them on the radar, Canadian Tech.
Yeah, so Canadian Tech is difficult. You're looking at a name like Celestica. Let's take that name, for example. It ran all the way to $500 a share. I can't believe that. I remember when Celestica was trading under $100, $60 a share, and it goes all the way to $500, pulled back significantly, but I don't think the pullback is enough yet for me to get excited. I would buy that name on the dip. It is our AI play here in Canada. And you look at a name also like Shopify, another name that has, that is a big tech winner, but it's tough.
Got to cut you off there because we're out of time for this one. Still ahead, Stats Canada is releasing labor data for November. We'll break those numbers down with Brendan Bernard, senior economist at Indeed. And our phone lines are open as well. Laurentian Bank of Canada reporting revenue for its latest quarter that came in below Bay Street expectations. Profit also fell 16% due to lower income and softer revenue in other segments. The bank also set aside more money than expected for potentially bad loans. The results follow an announcement from Laurentian earlier this week that National will acquire its retail and small and medium businesses, while Fairstone Bank will acquire Laurentian for $1.9 billion. Stellantis has received a default notice from the federal government for moving production of its Jeep Compass SUV to the U.S. Industry Minister Melanie Joly says the automaker is in default on its taxpayer-backed financial aid. Governments in Canada have pledged more than $500 million to Stellantis for costs in its 2 assembly plants in the country. Joly has been in a dispute resolution process with Stellantis to bring production back to the Brampton plant. West Fraser Timber says it will indefinitely curtail its oriented strand board mill in High Level, Alberta, effective in the spring of next year. The forestry company says the move is due to a significant weakening of demand. Nearly 200 employees will be affected. West Fraser also says the idling of one production line at its Georgia facility will continue indefinitely. And taking a look at the U.S. futures quickly, you can see the Dow and the S&P 500 pretty much a wash. NASDAQ is looking like it might be up 0.2. They're waiting some numbers down there, just like we were awaiting some numbers from Stats Canada, but we have them now. The November labor statistics We're going to talk about those numbers right now, and they were up. Yeah, up by 54,000 to 0.3% in November, driven by gains in part-time work, though. The employment rate rose 0.1 percentage point to 60.9. Unemployment rate fell 0.4 to 6.5%. Here to help make sense of all this is Brendan Bernard, senior economist at Indeed. Brendan, thanks as always for joining us.
Thanks for having me.
Just looking at that, the numbers were higher than expected. They were actually, the survey had, we were going to lose about 2.5K, and we gained 53,000 jobs, but a lot of part-time.
Yeah, I think the headline is what stands out for me. It's a big beat, large drop in the unemployment rate. And while part-time driving the increases does take a bit of a shine off it, when we look at some of the demographics driving the overall increase, youth were the big leader in today's job growth. And so that kind of makes a bit more sense than why part-time would be on the stronger side, because youth are more likely to be in part-time jobs. And it's definitely a positive story to see see a nice drop in the youth unemployment rate after several elevated years.
Yeah, I guess my question would be to see the overall unemployment rate drop as much as it did. I don't recall seeing a number drop that much in quite some time. Can you explain the drop? Going from 6.9 to 6.5, that to me is the big standout.
Yeah, well, any labor force survey, we got to take it with a grain of salt. The numbers have been quite volatile the past few months. We had these two large declines in the middle of Q3, and now a few. I think this is now three really positive months in a row. So I think let's temper on like seeing this as a huge change in October, but definitely if a 3-month hot streak, seeing that. I think it's a sign that the labor market has found at least a bit of a footing. Cautious, but this is the first noticeable downtick over the past 2 reports in a row where we saw the unemployment rate come down, where the situation does look a little different, where we've got to we'll have to go into the deeper into the numbers to evaluate what's going on. I think I both agree with you that a large move like this is a bit puzzling, but there does seem to be a little bit of a trend going on as well.
Is that, and I missed the first part. Someone was talking in my ear. The youth employment going up, is that partly because we've seen a reduction in foreign workers, do you think? There's some
peculiarities there. The number of youth, at least estimated by StatCan, who are working also jumped, which wouldn't get boosted by fewer youth being in the country. But that is a possibility. I think the surge in population that Canada experienced in 2022, 23, first half of 24, it did coincide with the deterioration of the youth job market. And so now that population growth has really come down to a halt, that could help youth on the margin land some work as well.
I just want to ask. Go ahead.
Just to put some numbers in it. So we had this 0.4 drop in the headline unemployment rate, 6.9 to 6.5. Among youth, we went from 14.1 to 12.8%. So over a full percentage point drop in the youth jobless rate in November.
Some welcome news. I just want to ask about the healthcare and social assistance sectors. What were they? What were the numbers there?
Yeah. So looking at the industry mix there, healthcare and social assistance, the large driver of today's of job numbers, accounting for close to net. So with an increase of about 55,000, 45.5 came from healthcare and social assistance. So not the widest breadth of industry job growth, though we saw some gains in a few other areas, natural resources and food services. And then these gains offset a noticeable decline in wholesale and retail trade. Manufacturing also slipped. So a mixed bag on the on the employment by industry front. Doesn't necessarily say the greatest thing about the strength of the labor market, that healthcare and social assistance is carrying the whole load for this month. And let me just check actually here. Let's see on the. Now, this was, though, a private sector month. So private sector employees up 52,000 of the 54,000 overall increase. So while healthcare and social assistance driving the headline, potentially more on the private sector side rather than public sector.
Okay.
I guess the main question we'll take from this is, I guess, what the Bank of Canada is going to do now. Will this now put them on hold, I guess, for their next meeting is the question I have. Are these numbers, they look great, the headline number, but will they, say, well, it's part-time, a lot of students getting jobs? Is this going to, put them on hold for the foreseeable future? I guess that's what all investors are going to wonder.
Yeah, I think when we see these stronger than expected numbers, what it does is then puts more weight on the inflation report, because when the numbers are coming in weak, that's a sign of and we know that there are other challenges looming facing the Canadian economy in terms of uncertainty that would potentially cause the Bank of Canada to lean cut. But when the job numbers, which are the first economic indicator we get, come in firm, well, then the bank can focus a bit on prices, and if the inflation situation shows some sign of stability, which I think the recent data has been relatively stable, then the impetus to cut from a weaker economic situation, well, we're not seeing that flashing red in the data. And then there you see it, the Canadian dollar jumping. I think it fits with the notion that now we can focus on inflation because the job market is stable for today, and that suggests more of a hold pattern than cut.
Okay, Brendan, thanks as always for joining us. We appreciate you breaking down the numbers.
Thanks for having me.
Brendan Bernard is senior economist at Indeed. Still ahead as the FIFA World Cup draw gets underway in Washington, Prime Minister Mark Carney is expected to play a little soccer diplomacy in the capital region. We'll have more on that after the break. And of course, our phone lines are open. Alan Small taking your questions on North American large caps. You can reach us at 1-855-326-6266 and email us as well. First call at bellmedia.ca. As the FIFA World Cup draw gets underway in Washington, North American leaders are expected to play a little soccer diplomacy in the capital region. Prime Minister Mark Carney, U.S. President Donald Trump, and Mexican President Claudia Sheinbaum will hold separate meetings over the future of the U.S.-Mexico-Canada trade agreement. CTV's Joy Melvin has more.
Can I keep it? For you.
President Donald Trump playing host to the world's largest sporting event. Alongside him, Canada's Prime Minister Mark Carney and Mexico's President Claudia Sheinbaum, teammates for the day that might just smooth over some recent trade tensions.
Three North American leaders who've never been in a room together are going to have a visual of a happy moment, drawing some country names for the World Cup. Those of us who are looking for some hope right now, that just maybe, at the end of the day, the right thing will happen.
This as the future of the USMCA agreement is being thrashed out at marathon meetings in Washington. The message from Canadian and U.S. companies: improve it, extend it, but keep it. After the president seemed to suggest he might blow it all up.
We'll either let it expire or we'll maybe work out another deal with Mexico and Canada.
Trade talks broke off in October. The U.S. president angry over an Ontario government ad criticizing tariffs that Trump imposed on Canada. It didn't go over well. U.S. Trade Representative Jameson Greer told Politico, the president's view is he only wants deals that are a good deal. The reason why we built a review period into USMCA was in case we needed to revise it, review it, or exit it.
Not only are we your biggest customers, but we put them into the cars that we make. The cars that Donald Trump has been targeting are 50% American content as of 2024, up from 38 when the USMCA started in 2019.
Flavio Volpe represents automotive parts manufacturers and made his case to the Americans with the numbers.
The U.S. trade panel heard from 150 representatives, and they all seem to say the same thing, that the free trade agreement is crucial to the North American economy.
All right, let's bring in Alan Small, Senior Investment Advisor at the Alan Small Financial Group with IA Private Wealth. And do you think anything will come out of this little tete-a-tete-a-tete? I guess it's tete-a-tete and a tete-a-tete and then another tete-a-tete.
Yeah, all three of them in one room, I guess.
Yeah.
I didn't realize that they've never all been in the same room at the
together.
same time. I'm not sure anything's going to come out of that. I think it's going to be more celebratory, the World Cup and drawing the teams and all that. But we definitely, obviously, the talks are happening already behind the scenes. CUSMA, USMCA, whatever you want to call it, obviously crucial to the economy in North America. A lot of the stuff that we send to the U.S. Right now is not being tariffed because of that agreement.
I think that's what people forgot. I think it's 85% of the goods we ship to the U.S. are part of CUSMA.
Exactly. And so you throw that out the window, and what happens to a lot of these goods that we send down south?
Yeah.
You know, we're upset about aluminum, we're upset about steel and things like that, and forest products, et cetera. But, you know, most of the stuff that we send there is covered. So if that goes away or changes, how will that change the landscape for a lot of businesses here in our country? That's a tough one.
I know. I mean, for now, I'm not saying it's perfect, but it feels like we have adapted and adjusted to the tariffs, any of the tariffs that are impacting us. There have been impacts, Algoma, things like definitely with the job losses, but it seems like most companies have kind of worked around it for now.
Yeah, it's been very specific. Certain industries, certain parts, sectors of the economy. But if this, CUSMA goes away or changes to a certain degree, and obviously we heard the president in that pact say that, we'll either negotiate or let it go. If they do let it go, which I don't think he will, I think that would be a big mistake, obviously. But I'm surprised to see us go this far with respect to aluminum and steel. So we'll have to see what happens. It's definitely very important for our country, but also important for the U.S. and obviously important for Mexico as well.
All right, we'll leave it there. Still ahead, we're going to take a look at some notable analyst calls and recommendations. All right, let's take a look at some of the notable analyst calls and recommendations. City analysts, including Martin Wilkie, upgrading Alstom and Volvo to buy, while downgrading Kion to neutral, with its shares now reflecting growth outlook following a strong rally. Volvo was upgraded on higher conviction of improving trucks and construction fundamentals through 26-27. In the note, analysts cite growth momentum, with the European capital goods space has been gradually improving and should broaden further next year. Now, for more on the European auto sector, North American auto sector, we're going to ask your opinion on it. I'm probably the worst guy to talk about new cars because my car is 33 years old and I've had it for 20 years. So I don't buy new cars, but what are your thoughts on the auto industry and what to do with it?
Tough industry. You know, for a long time, I was a buyer of the GMs, the Fords. They're trading at single-digit multiples, so very, very cheap. And then you kind of realize that they're cheap for a reason. And for a long time, again, their dividends were pretty good. GM had a great dividend for many years, and obviously not as much right now. So tough to own some of these automakers, whether Europe, whether it's North America. You know, Race. You know, I love that ticker symbol, Race, Ferrari. That to me has been the big winner for a while now.
Yeah.
Those that have talked about the space have talked about Race and talked about that name. But overall, tough to own a name like Ford. Although Ford has ticked a little bit higher. Last I saw it, somewhere around $13 a share. I say tick higher because it was down to $9, $10 at one point. So these names are difficult and tough industry. Especially with what's going on with tariffs and all of that. The costs just continue to rise, it seems like, for these automakers.
Yeah, was it $65,000 for a new car now? Average price in Canada?
Yeah.
We'll leave it at that. When we come back, Alan's going to take your questions on First Call. Time to get in first call and first email, and that goes to Bruno, who says, good morning, gentlemen. My question is on Constellation Software. I understand regarding the president leaving and also the fact of AI possibly having an impact in the future. But what I don't understand is how the banks can forecast a $5,400 value on this company when all it seems to be doing is going down approximately over 1,000 within the last 2 months. If you can kindly give me your outlook on this company, and would you buy it at this price? It's the longest email I've read to date.
Yeah, it's it's a good question, and software companies have been taking it on the chin quite a bit, and for quite some time now. Constellation Software, I think, is down like 35% from the high, and it's not much different than some of the U.S. software names like CRM or Salesforce, like a ServiceNow. All these names are down by quite a bit. And the fear and that we keep hearing is that AI is going to eat their lunch, that AI will take over, and that these software companies will not be as necessary. Another name that comes to mind is Adobe. Yeah. I think Adobe, out of all those, is probably in the worst shape, in my opinion. So I actually like Constellation Software. I think you can buy it here. Looking at the chart there, I think in the last little bit, it has kind of solidified there, perhaps has found a bit of a bottom, hopefully, and can work its way higher. And again, I think based on the dip and how much it's fallen, that's what I'm basing my recommendation on. Obviously, if the price was a lot higher, I would take a step back. But for me, I think, yes, I think Constellation Software is a name that perhaps you can, dollar cost average into. You may not want to buy all of it all in one shot, but I think you can slowly take a position in that name.
All right. Is it one of those companies that always seems to find a way?
They do, yeah. And they've been doing so well for so long. To see them fall as quickly as they have, as this person says in the email, it's difficult to see. And I think a lot of people in Canada own a name like Constellation Software, even though the share price is quite expensive.
Okay, Meta, we were talking about it earlier, and this one is from Rich. It says, hi there. Meta made some big moves yesterday. Can I get your perspective?
Perspective in one word, great. I love the name. I think I've seen a lot of targets, $850 a share. I think the high was $796. Trading today in the 600, mid 600s. I think a name that has fallen for reasons, in my opinion, there it is, 660. I don't agree with the pullback. I think the spend will do Meta well. A lot of, I guess, investors are nervous about how much money they're spending. Yeah. Are they getting return for their spend? Are they over their skis in their spending? To me, the answer is no. I think when you look at a name like Meta and their free cash flow is just tremendous. Fantastic company. Mark Zuckerberg, whether you like him or not, I think he's a great CEO and doing the right things for the future. And I would be a buyer at these prices.
Because he really has he's reinvented that company throughout.
Multiple times, yeah. And they're not just, when I tell people Meta, they're like, oh, Facebook, no one goes on Facebook anymore. Well, they're a lot more than just Facebook, right? Yeah. WhatsApp, Instagram, Facebook. They have the glasses, which I own, by the way. The Ray-Bans, the wearables. It's just a fantastic company. And I think a name at these prices, yes, that you could take a look at.
And people still do go on Facebook. It's still the largest in the world. Right?
Absolutely.
Yeah. Okay, this one from Nick. I own Intel. I'm a bit worried. Should I hold on?
Intel is a name that the government is betting on. The government of the United States pumping a lot of money into Intel over the last bunch of years. I know the Biden administration made a bet on Intel, and recently President Trump has probably continued to make that bet, or at least tried to get some equity and say, well, we gave you all this money, we now own 10% of you. So I just think Intel is the wrong name to back in this space. Obviously a U.S. name, so that's why they did it. But I am also concerned about Intel. It's had a great run from the bottom when all this money has been injected into Intel, even NVIDIA injecting some money there. So a name that at these prices I probably would look elsewhere. Not my number one chip maker at this point. I think there are other chip companies that you could buy that are cheaper and that are doing a lot better in terms of sales, and I think have a better future ahead of them.
Okay, and we're going to try and sneak one more in here. We got a little bit of time. It's from Alex. I'm looking to make a buy in the tourism sector. Is Marriott a good buy, or is there another stock that you would recommend?
Yeah, so tourism, it's difficult, right? I think it's going to go as the economy goes. I think a lot of individuals were nervous to see a slowdown in the U.S., a slowdown in Canada. What's that going to do for tourism? But as you can see there, Marriott has had a pretty good chart. It's been moving higher. I think the fears of a slowdown in the economy, even though we are seeing our economy here kind of flatlining, U.S. economy has been strong. I think a lot of people are spending. That K-shaped economy that we keep hearing about. The wealthy keep spending, and the not so wealthy, unfortunately.
But can that continue? What is it? 10% is pretty much propping up the economy, right?
Yeah, and can that continue? Great question. I think a lot of that's going to have to do with where interest rates go. I think it's a lot going to have to do with the stimulus that the government adds over time, and if they can succeed in doing that. I think the tourism sector in general, I think can continue to do well. We're seeing it. Obviously, your main names are doing better than some of your smaller names. But yeah, I think some of the big players will continue to do well.
Yeah, and tourism's facing some interesting challenges right now because people are kind of tired of tourism. In a way, they're stuck between that rock and a hard place, right? Of do we want more tourists coming, which is great because it brings in money, but we're tired of having all these people here.
Yeah, and also get those themes right. The Canadians want to stay in Canada; they don't want to go down to the U.S. as they used to. As well.
All right, we're going to wrap it up there, Alan. Thanks as always. That's it for us here on The Street. Thank you to Alan Small for joining us today. Andy's up next with the Open, and the markets will open just over 30 minutes from now. Have a great weekend.